Hey, what's going on, everyone? Welcome back to my newest video in my Get Educated series sponsored by BitGet. Today, we're going to talk about a very popular topic, how to enter a trade. I get asked this a lot, where to enter, so I figured I'd make a video about it so that way you guys can better find entries and plan your trades. Real quick, I just want to give a shout out to BitGet. They have an amazing exchange. They're continuing to grow, and they're actually trying to expand to the US right now. So hopefully someday there'll be a US regulated exchange as well. But for now, you can try them out. There is a link below. You can save 15% on your trading fees if you use that link. You can trade versus Bitcoin or Ethereum or other coins on perpetual swap. Otherwise, you could trade versus USDT or USDC or some others. Again, no KYC, no VPN. They have a mobile app, so a very solid exchange. So why don't we go ahead and get started? I'm going to show you guys how to enter into a trade. All right, so what should you do before entering a trade? Step number one should be direction. All right, you need to know a direction. Are you going to buy or long, as they call it, or are you going to be shorting? Okay, if you're buying or longing, you're speculating on the asset to go up in price. If you're shorting, you're speculating on the asset to go down. Some may also call that short selling. Next part is conviction, all right, because a lot of times people enter a trade and they don't know why. Do they have confirmation? Is there a reason why you're entering the trade other than you think it's going to go up or you think it's going to go down? Why are you inclined to enter this position? Next would be a setup or a strategy. So do you have a proven strategy that has given you confirmations to enter this trade? Do you have your indicator linking up with a trend line, or certain aspects on the chart are telling you, okay, when this happens, this should happen, and more often than not, that is what happens, so that's why I'm entering here. The next part would be your actual entry. You should have a pre-planned entry. All right, a level where you're interested in taking an entry, which provides you a good risk reward, which we'll talk about soon. But if you're just entering anywhere and everywhere because you don't know exactly where you should enter, then a lot of times you're probably going to get stopped out, or you're going to take bigger losses than you would like to take because you're not getting optimal entries. All right, so after all that, you need to understand where your invalidation is, because any good trade has an invalidation point. If you don't have an invalidation point, then it's kind of weird that you even were able to enter that trade in the first place. And last but not least would be your actual risk. Now, I have full videos on this, but I do want to add it into this video because risk management is so important, and understanding your risk when entering a position can actually help you with your entries, and you can actually manage your position sizing and change your entries slightly depending on your position size. All right, so let's break down the steps and go through the process of entering a trade. All right, step one, direction. Keep it simple. Buy at support, sell at resistance, or short at resistance. Simple enough, right? So here we have a resistance, and here we have a support. And as you can see here, if you buy at support, you're going to see that you have decent luck. All right. Now, this is going to be very simple. There's obviously a million different criteria you can have for entering a trade, but you could say, all right, this is a support here. I'm going to enter this trade with, stop loss wherever, my validation wherever, and bam. All right. Pretty simple. Or you could say, look, we've got a resistance here. I'm going to short. And if you short this resistance here or this resistance here, you would have already been in profit. Okay, so that's very simple breakdown. Obviously, there's way more to it, but direction is key, and shorting at resistance or buying at support is the utmost important thing you can do if you're trading. That will increase your success just by doing that if you know nothing else. So make sure you understand where you're buying or where you're shorting at. A big mistake people make is buying at resistance, okay? So we had this resistance here, right? And people will be like, oh, this looks bullish, I'm going to buy here. And it's like, you're at a resistance, you need to wait for a breakout. And the next thing would be people FOMO shorting a breakdown, right? Maybe this started to break down and you didn't wait for a close or whatever, or you just FOMO shorted with emotions and you shorted a support. Let's talk about conviction. And there's a lot of different ways you can go about having conviction. But here you go. We have a support here, and price is touched that multiple times, and you can see here All right, price is now at support again, and it hasn't broke through and it's consolidating below. And so I can say, all right, this is a support. Can I buy here? Well, what do I see here? If I look at my OBV and use OBV as a helpful indicator, and maybe even Top Goon X, I see a Top Goon X buy approaching alert. And I also see on balance volume, or OBV, is pushing up and making a bullish divergence. So that would give me more conviction here to potentially enter along here or buy here, because I've got OBV being bullish, I've got Top Goon X with the buy approaching alert, which basically means buy the dip, and I've got price not breaking through support. So I've got a lot of different factors here. Gives me a great risk to reward, and that extra conviction piece with my extra indicator, or maybe if I had a pattern breakout or something else, right, to give me confidence here, that can all increase your conviction. And the more confirming factors you have, the higher conviction you can have for a trade, right? Now, if I wanted to buy here and OBV was down low and breaking new lows and looking bearish, I would have much less conviction here, right? All right, so the next point is entry, all right? And basically, I actually have a very good example of a trade that I posted today on Twitter, and it was this. So we have this, this breakout here, and I'm saying, all right, this is a key resistance now. All right, that's the key for me. I see this breakout, and then I see a high volume rejection. So that's giving me a little conviction for a rejection. All right, and now, so I've got a direction. I'm looking to short on a breakdown, okay, because I want to short at resistance. So if I short here before it breaks down, I'm actually shorting at support. So I'm waiting for a short, which is my number one direction. And then two, I'm playing conviction, which this high volume rejection gives me a little bit of conviction. All right. And my indicators, you can see, are also showing bearish divergence, all right, on OBV. And I've got Top Goon X giving me a bearish divergence signal as well. So that gives me a little extra conviction. So I can say, all right, I feel good about potentially entering a short here. I don't want to short support, obviously, right? So I'm waiting for number three, which is my entry. And my entry would be a breakdown of support and a retest. And you can see here, it's picture perfect. All right, we've got a breakdown here, a close below. That gives me my entry now is going to trigger on a retest. And you can see we've got a beautiful retest. I can take entry there, and my short would be in profit now. All right. So next we would want to know our invalidation, right? Because I don't want to put a stop loss on a short entry from here up at 2% if my target is only 2%, right? That's not a great risk to reward and not a good probability for being profitable over time. So what I would do here is I would basically, for my personal trading strategy, which is different than everyone else's, I would wait for a 15-minute close back above this trend line. If that happened, that would be invalidation for me. But if we're playing, level invalidations, I would probably just put a stop loss above this little candle here. That was the breakdown candle. And then that would give me, and we're not worried about target right now, that would give me a nice tight invalidation there, a good risk reward regardless of what my target is down here. So that's how I would play an invalidation. Remember, it's important to know your invalidations. They're going to be different if you're playing patterns, if you're playing different types of breakouts, if you're playing different types of candlestick patterns. So your invalidation isn't always just going to be a set factor. All right, it depends on your strategy. And as we're talking about it, risk, okay? So I've talked about this in a lot of my videos, and we won't get too in depth about it, but you really do need to understand your risk before entering a trade. You should be calculating it and really shouldn't be risking probably more than 2% on your account. There's different ways, like if you have a much smaller account and it's kind of a play account or whatever, or if you're using a very tiny account and you're risking more, that's probably okay. But if you're using a full-size main account, it's going to be important to not over risk yourself, because at some point you're going to go on a losing streak. And if you're risking 5 to 10% of your whole account on every trade, it only takes 2 or 3 trades to kind of wreck your account, and by that time you're down 15 to 25%, and it's really hard to dig out of that hole. So risking 1 to 2% of a whole account is a very good strategy to maintain for long-term profitability, because you never know when you're going to go on a bad streak. And keeping that risk small is going to be of the utmost importance. And I'd also mentioned earlier about, different entries. So if am being impatient and not getting my initial entry, and I enter down here instead of on a retest, okay, on this candle, then you can see it makes my stop loss wider at 0.84%. Now, I calculated my stop loss at 0.5% risk, right? So that would be a certain entry size to maintain, 1 to 2% risk on my entire portfolio. But if I enter down here, let's say at 0.9%, I'm going to have to basically do about half size on that position because my risk is now widened, all right? And the risk I run into is if I want to do a full size position, but I'm not patient and waiting for my entry, then I have to tighten my stop loss down to that 0.5%, and maybe I end up getting stopped out on that trade before it runs to target. And that's what you're going to see a lot of people do is they go too big, they tighten their stop loss, they get stopped out, and then it runs. Be cautious of your stop losses, go a little bit, slightly a bit wider than you need to, than you feel like you need to, while managing your risk and calculating your position sizes. Thank you so much for watching this whole video. I appreciate you all, and I really, really, really hope you're enjoying the education. If you haven't combed through my YouTube, tons and tons of educational videos for the most beginners and even intermediate levels. So make sure you check it out. This is probably one of the best breakdown channels on YouTube to really get down to the basics. Very clear and concise education, and very thorough as well. So make sure you go through all my videos. I appreciate any thumbs ups. I appreciate if you subscribe. And as always, follow me on Twitter for more consistent updates. Peace.